Hey, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for December 28th, 2023. So, a low volume, low volatility day, so a lot of grinding and quietude. I just recorded about an hour long discussion of the essence of true storytelling, true story listening, and true story thinking for the Foundations guys that I thought went pretty well. And that is well worth an hour listen on that one. It is kind of foundational. That's going to form the guts of, I think, book number 7, which is going to be a book on true storytelling for traders and why it matters and how it all fits together. It's an integration of the work of Dr. Boji in True Storytelling and Professor Fletcher's work on story thinking, which is a integration of the scientific method and artful story thinking from experience. It's not an either or proposition. It's how you blend that stuff together, and spent an hour working through the details of that. And I thought it sounded pretty good in my ear, so I think it's about ready to put into book form and workshop form. So be on the lookout for that. So let's get started with the 30-minute hybrid swing. With Alcoa. And today this little, I treated that as a collapsing dragon breaking through the dragon, and it really didn't go anywhere and exited near the Bollinger Band mean for basically a scratch. There wasn't much to report on that one. AI that had a slight bump from the opening, a emerging dragon essentially, caught a 2 style. So there's your Kata 2 formation, and then it breaks above that, so that's an automatic entry. And it ran up nicely to 31.20 and then sold back off. And then rather than wait for it to get to the VWAP or the skin of the dragon, I just took that there at the bottom of that bar, and that was about an R. I thought about this one, but it was late in the day and there wasn't much volume, so I elected not to take that short. I did want to take it, but that was the trade not taken. Amazon, micro gain, a little breakout above the dragon, speculated in after lunch, fractional gain. Caterpillar, fractional gain on the short side on the collapsing dragon. Cliff, scratch. CVS, got short on this one. Was a sort of like a felt like opened here, ran all the way up here. I missed that move, and then it just rolled over. So I took like this short with standard risk, and it kind of droned on down, but never really broke below the Bollinger Band mean significantly. And when the PSAR came up in support, that looked like the time to get out, and that captured, maybe an R. That was a lot of work for an R. Disney, same thing, short for half an R. Dish. This one was a clear emerging dragon, and this has been in a nice week-long move. So this is the 5-day look back here, the blue edge right here. And this has just been and we've only been getting these little bites. So when this one broke above the peak of the RL30 with, again, rising lows and above the Bollinger Band mean, could have taken it in here, but I couldn't ignore it any longer here. And then that ran up nicely. And then on this sell-off in here, took it at the edge of the dragon for about 2R. That's one that could show some promise next week if it maintains this week's momentum. That's one of the best charts for the whole week, actually, in terms of consistency. Next up is Devon. Any second now.
Recording in progress.
All right, so this is Devon. And let's see, we have. So here's the opening bar that started the yellow box. And this thing has clearly rolled over. You get that little collapsing dragon here yesterday. And today it opened here, ran up, and then closed, and then started selling off again, short. And then it just collapses further, and then the dragon catches up to it. I don't want to carry it overnight, so we get half an hour. And it's holding support kind of at that critical state where you would expect it to. So this could actually be an interesting trade tomorrow. Does it fail or does it rebound? So I think that's actually got some potential for a Friday going into the New Year weekend. Shortened session, lower volume. Electronic arts, no trade. Emerging markets, no trade. Ethereum, no trade. Mexico, I get it at the breaking of the Bollinger Band mean, and it's already PSAR flipped. It's got a collapsing dragon against the belly of the RL10 there. So that's a easy one. It turns to winter really quick, and then end up getting about an hour and a half with a standard exit. Brazil, same trade, but it didn't fail as far, basically a scratch. Intel, no trade. That's about as sideways quiet channel as you could ever want. IP, this was a pocket entry short, a COTA 2 to the downside, fractional gain. IYR, that's real estate. No trade, but I missed a COTA 2 in there somewhere. This closed really nicely, so I actually think this could be nice next week because that support level, or that resistance level, I should say, feels like a decisive move. Like it feels like it's north of that now. So I think that could bode well for next week. Let's take a look at that on a longer time frame. See if that's still true. Yeah, it's clear of this little rebound and go has now cleared on a daily basis the peak of the RL10, and that's above that last one. So this is technically free and clear. So if I'm an equity investor and I made good money on a 20% move in the S&P this year, and I'm trying to figure out where to put that money, maybe IYR with no resistance overhead is a place to put it. And it has a long way to go when we look at the 3-day. You know, this thing doesn't peak out ultimate high till 114. So there's still a 20% gain to the upside. And this will be interesting next year when we look at what happens at that level. So if it gets above 95, that's good to go because it could go now. That's a $10 move up to 105-ish. Another $10 move. This is good because it broke through here. That test, it voted north. Now we're going to see what it does with that resistance. Let me know if you found that helpful in the chat. Coke. So back to the 30-minute chart. no trade today, um, but still generally positive. Regional banks, no trade. Mattel was a crossing of the Bollinger Band mean and a SSC entry, a delayed SSC, if you will, and fractional win. McDonald's, boy, that's as nice a 5-day chart as you want. So that's one that I decided to hold overnight. We've been getting these tiny little bites, but that has not been a very efficient capture of that, what looks like a swing move. So I feel like maybe my exits were too tight and I was worried too much about adverse gaps. So I made a deliberate decision this time, since we had a little cushion of markets money, to try to hold that and see if I could relax a little bit. Merck, Scratch, Microsoft, oops, half an hour. Marijuana, no trade. Nvidia, no trade. Clean Energy, no trade. Rivian, no trade. That's getting ready to collapse. The S&P was another just sideways quiet with a slight bump up, but really mostly sideways today was the story. Complacency. Treasuries came all the way back to the Bollinger Band mean, which makes that exit yesterday look pretty good. Tesla was a gift short. This is a collapsing dragon, crossed the Bollinger Band mean, moved into the winter, and then decided to capture 2R and hold no overnight risk. Walmart, fractional gain on the OWL entry, and then U.S. Steel, no trade. I'm sorry, one trade. We closed the entry from yesterday. I didn't want to hold that one overnight because it had come all the way back to the Bollinger Band mean. Acts as a, it timed out essentially. I'm looking at Zoom chat as an alternative, as a supplement to what we're doing. There may be some collaboration possibilities in there with team chat and meetings and whatnot. It may be that I can, if I get the business use, then I can make that available as infrastructure. We'll see if that works. I could do that, I think, for like maybe foundation students or something. So thinking about it. All right, so this is sniper trade of the day. This is EEM on 3-minute. So we get a channel defined by those two peaks, and the peak and the valley of the RL10. So I treat that distance in here as the yellow zone. This is nice moment because you also got the VWAP comes up to here, and then at the same time that price falls through the belly of the RL10, it's also crossing the VWAP at the same time the river is rolling over and the PSAR is pointing its way downward. So that felt like a no-brainer, and I just put the risk box like that. Check or hold. So just trying to paint that picture. And I would certainly go long that. Standard exit at the PSAR flip, about an R. Continuation on a collapsing dragon. Standard exit at the skin of the dragon. What made that a little bit different this time in those two exits? This one was kind of an orderly reversal. So I took it here. This collapse just kind of broke through that double bottom, collapsing dragon, and then big collapse all the way down to here, and then inside that same bar, it ran up and ran up, and that was enough. It gave back this much in 2 bars. So I kept this much, which is about an R. So that's 1 R, and that's 1 R. So total of 2 so far. And I think that was it for the day. Yeah, there was hardly any movement in the market in the afternoon, so I was content to chillax. This one is EWW. So I want to just paint the picture for, conceptual framing. So I'm treating this, there's my peak of the RL30, or RL10, excuse me. And then here was the bottom of the RL10 I was looking at. So I was looking at this whole thing here as the channel. And then I noticed the rising lows. And here at the VWAP it broke. So here's the VWAP. That's our VWAP. And so the R10 peaked, and then it got a lower high, and now the PSAR flipped and rolled over. And here's where the VWAP supported it, but then here's where the VWAP failed, and here's where the PSAR failed, and now the dragon has rolled over. And I looked at this as a collapsing dragon, and so the first leg down, in my view, could be that one. And then I wonder, would that hold on that test? If that fails, then this should be, panic selling. Is at the support level. Look how many times that thing kept going up and up and up and up. So if this fails, if this thing fails down to here, then I should be at no lose plus dinner for 2. I could maybe even think of a second position. So now I got to decide where to put my stop. And the price that invalidates this whole thing is a break out of this channel. So that means I should put my stop at the top of the PSAR flip. So my risk box looks like that. And again, this thing at this location here broke the VWAP, the PSAR, and this rising tide of higher lows. And now this is where the actual collapsing dragon occurs to me. Right there. Check or hold. So that's not even an R. That's about a 0.5 R. If it gets this far. So now what I'm rehearsing in my mind is if this thing starts failing on the way down and then holds and starts reversing, if it does not break through here, like if it does not break through, then what I've got to do is get my stop from up here and down into here so that I can at least capture a little bit of a gain. So I'm not going to add a second position here because this is a low volatility, low volume day. And I'm going to use this as the price level, which says if it gets there, I should already be here at no lose plus dinner for 2. I don't even have to wait for it to stall. Like if it just falls right through there, I'm not, the soonest I could even put a second position on is at a 2-hour battle drill, which is well off the chart. As soon as that thing goes through here, I've got to get my stop down to this level. Check or hold. And it behaves. So I could look at this and just say, you know what? That's not crazy. I could just take that as an exit, knowing that as soon as I buy it, it might fail, and that's okay, because if it were to fall below that, I'm going to get a collapsing dragon here at that level, which means that if this price, you see how this price has not even gotten through the PSAR or the dragon. Like if I cashed it right here and then it started failing, I could actually just get short right here because it's making lower lows. And that would be a pocket entry. That would be a Kata 2 short because I had a successful trade. That makes this a continuation of the primary trend. The fact that this was a decisive move down and then this was a lame recovery and it's starting to fail again makes me think that this is that could happen again. So I could get short in here. If I get out here, I could get short here instead of waiting for this. Oh, so I did. And then I basically missed all the signals later in the day because I was persuaded that there was nothing happening, and then I missed the next big move too. But that was a pretty tight wrist box in Brazil, and I felt good getting. This was essentially that was cashing 2R, and that felt good. That felt good enough for today. Okay, only one trade posted today. So let's find that one. And George gets Alcoa. He notices this. So collapsing dragon. Bingo. And takes that for 0.4. And then stays out of the chop. Correct. Gold stars. Get paid. Looking at the reports. Yeah, this was the tightest range of the last 30 days. There's just not much. Tomorrow I expect maybe there's a little bump in either direction, but I would expect people just to be content with a 21% gain this year in the S&P and little to no follow through. I think it'll just be tactical trading tomorrow. I'll be tactically trading, but I'm just saying I think it's little follow through. Very strong, bullish, quiet, great volatility. I mean, great for trading on the long side, I should say it that way. Some grinding breakouts across the board, featuring the large caps and the industrials, and same thing with the ETFs. DIA and Japan and SPY making big breakouts. I say big breakout. What I mean is breakout on 10-day, 1 month, 3 month, and 6 month. The size of the breakout was small because the number is 100. It means it made a micro breakout. I say big because it was a strong 6 month look back breakout. The usual suspects in the auto framework. Lots of squeezes today. Not surprising at all, given how narrow the S&P's range was. Okay. And as you can see on that chart, the S&P was about, of all the things that we track, the S&P, which is I always highlight in blue, was there were only two things that were more tightly squeezed than the market itself, IBM and AXP. So that's complacency and contentment. Lots of things in the fall. The range is so narrow that you see some big red numbers here on the 2-day, but remember that 2-day range is so small, it doesn't take much of a breakout to trigger an alert, and the same thing on the breakouts to the upside. I just look at that as instructive for where the default strength is. Merck, JP Morgan, McDonald's, American Express, Microsoft, IBM, Coke, Apple, Nike. And then finance, diamonds, the spiders, and Japan. That's pretty cool. And real estate. And emerging markets are enjoying it. All right, that's everything we got for today. And we'll be ready for them tomorrow. Take good care.